Be Wealthy and Smart, episode 1385.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about the global margin call, because that's what we have going on, a global situation of too much leverage that is being forced into a sell-off, starting in Japan and ricocheting around the world. Now, Japan has been having currency problems, interest rate problems, and now stock market problems. Why is that a problem for U.S. investors today? Well, that's because many deep pools of money, traders from the U.S., borrow money in Japan, buy Japanese treasuries, and make a nice profit on what used to be a low-risk trade. When you can borrow at a low rate and earn a high rate of interest in a government bond that typically has little risk, that's known as the carry trade, and that became a very popular trade for large pools of money in the U.S. The problem is Japan's been having currency issues, with their currency dropping 30% in value, which led to an interest rate hike on Friday by the Bank of Japan. That led to a stock market decline in Japan, which started Friday and developed over the weekend, with the Nikkei closing today down 12.7%. It's the biggest one-day drop in the Nikkei's history. That's an even larger drop than happened on the Black Monday crash in 1987. It spilled over to South Korea, and now they have halted all sell orders on markets as markets are down more than 5%. And in the United States, we started to see the drop on Sunday night. I waited until this morning to do this podcast so I could give you a fresh update after the market opened, and we saw the Dow drop 1,089 points at the open, or 2.7%, the NASDAQ down 3.6%, and the S&P 500 down 3.1%. Now, stocks have rebounded off their lows, but that was pretty much expected, and I do feel that by the end of today, we probably will set a new lower low. What people aren't seeing is this is not a one-day decline or a one-day situation. This is a global margin call where investors who are highly leveraged are going to have their positions sold out to cover the deficits in their accounts, and that's going to cause more forced selling. This is going to happen over multiple waves, in my opinion. This first wave is due to Japan and what's been going on with the carry trade. The next wave will likely come from war between Iran and Israel. According to the news, we are expecting some strikes on Israel by Iran as early as today. The next wave would likely come from recession fears, where people are worried that the stock market crash is going to cause more problems, and with the Fed keeping rates stubbornly high, even if they drop them in an emergency meeting, people will speculate that the Fed kept rates too high for too long, which will likely lead to a bank failure of one or more banks. In my opinion, it's likely that this is a systemic problem that, due to the trading and the high leverage that had occurred with so many financial institutions, it's bound to be negative on one or more banks. We also have highly leveraged Bitcoin trades, which has caused a sharp Bitcoin sell-off to the point where Bitcoin touched 50,000 and is now at 54,000. And the last wave of fear I think we're going to get is systemic risk from lack of liquidity. These things I think will play out through most of August, and so I don't feel that this is something that we need to rush into in terms of buying. I think the time to buy is when there's maximum pessimism, and people are very optimistic still and are starting to buy the dip and saying that stocks are on sale, which is great. They're right, except that kind of behavior and that kind of thought doesn't happen at the bottom of a market. At the bottom of a market, no one wants to buy. Everyone's exhausted. No one feels it will ever go up. And that usually is the time to buy. So we're waiting for that time period will, in my opinion, be at the end of August. Some bright spots in the market could be precious metals. We could get a bounce in gold and silver. We also will likely see oil staying high, and should we have war in the Middle East, that should spike the price of oil as well as defense contractors. Anything related to war will likely rise in value. You also can invest in any kind of a short ETF, a UVXY or the VIX, as more volatility is likely. Now, should we get any news from the Fed that they have started quantitative easing, that will be a positive for the markets, and that would give the markets a big bounce. So listen for any kind of news about quantitative easing. That would be extremely helpful. And that's why I was very bullish after the decline from COVID in 2020, because the Fed started quantitative easing. If we don't hear news about quantitative easing, the markets will stay relatively tight, and that will mean we'll have more difficulty in the markets. Right now, although we're hearing rumors of recession, Goldman Sachs is only projecting a 25% chance of recession. I think that's pretty much on target. I would agree with that. I don't see that we are at a higher risk of recession, but I do think that the media will use the fear of recession to talk about that quite a bit in their narrative. During extreme volatility in markets like this, usually the best move to make is no move at all. It's usually best not to sell, not to panic, and to stay calm. These things pass, and the only thing that heals them is time. The problem with selling is you're going to lock in your loss. And what happens after the markets decline like this is usually a strong rebound. What I've been projecting for longer term markets is from a low in 2024, a much higher market through 2025 up into 2027. So any bottom that we see in 2024 will likely be an amazing buying opportunity for the next 3 years. And we have to keep that in perspective. But if you sell, you're locking in your losses, and there's no hope of the rubber band effect of the rebound. Usually after the market drops sharply, it does rebound sharply. And the only way to take advantage of that gain from the rebound is to stay invested. And while we don't like these kinds of volatility, nobody feels comfortable during these times of volatility, the markets are going to rebound and are going to recover, but we will have to get through this very difficult August. So prepare for this month to be one of multiple waves of bad news. These 5 phases I've laid out for you, I think we're going to see all of them. And this could also be the opportunity for us to bring in a new financial system, which we've been talking about for a long time. This is exactly the kind of thing we would need to see in order to switch over to a more positive system and eliminate this highly leveraged system that we've been in. So stay focused on the long term. This is going to take a while to play out. At the point of maximum pessimism, I will be doing a podcast and reporting to you when I see that happening. But at this time, people are still way too optimistic, and I don't see we're anywhere near the bottom yet. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button, and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.